My name is Terence Orslan with TS9 Associates, Strategies and Policies in the Mining Sector. Today's guest is Rob McEwen in McEwen Mining. I'm glad people are signing in. Thank you for your patience. I'm going to start with regularly the way we started. CIM with 11 technical societies, right, and more than 25 local branches across Canada. It's a trusted authority and collective source for advancing knowledge, guidelines, and best practices. The mission of CIM is to cultivate knowledge, best practices, and innovation to support our members, improve awareness of the minerals and metals industry in society, and evolve the sector responsibility. The CIM MES, which is hosting Mr. McEwen today, actively works towards furthering education in mineral economics, provide industry professionals with the opportunity to network and share experiences, insights, and ideas on topics relating to economics, management, and financial aspects of the business. Our generous sponsor is IM. Discussion group dates back to late 70s, on and off, but it's been very standard and continues during the Carlos Jackie's chairmanship of the CIM MES. Today's speaker, Rob McEwen, has chosen the topic that Houston, we have a problem. I think we will divide the topic into 3 or 4 segments. One, we will talk about what the problem is for the industry, and that's got to do a lot with the skill set and the experiences and all. Secondly, we will talk about the project that McEwen Mining has. I think there are highlights over there about Argentina, the countries, the 3 countries that they operate in. We will talk about those. And finally, we will talk about the industry norms and all. But I think we will start with the industry norms first before we talk about the issues with respect to the problems that the industry has, which essentially goes around the skill set and the manpower issues. Mr. McEwen has been in this business of gold and mining for many years, and since the 80s, Gold Corp is one asset that emerged with Wheaton River many years ago. He's been awarded Mining Hall of Fame some years ago, and as well the Mining Man of the Year, Developer of the Year, as well as the Order of Canada a few years ago. There's no shortage of the accolades for Mr. McEwen, and McEwen is known as a company builder as well as industry representative in terms of the addressing the issues, and somewhat of a disruptor as well, which we need all the time in this industry. I think his first foray was with Dickinson Mining, which was a small mining company in Red Lake, that he spent $10 million on exploration on that, which is a small amount of money, but $10 million turned out to be close to $6 billion in a few years' time in terms of added value and discovery of the gold. And he did something ingenious at a time. He actually opened up the database to a world audience to come with the exploration ideas and suggestions. And that discovery itself, that recommendations itself, turned out to be the billions of dollars that added to the Dickinson value at the time became Gold Corp, and so on. So I'm going to turn the table to Mr. McEwen. Thank you for your patience, Rob. I know you've been waiting since this CIM issue that surfaced for this. So let me start with the markets first and the way you see it for the gold and copper for the mining sector.
Okay, thank you, Terry.
Rob, can I maybe say one word? For those who want to ask questions for Rob, please input the questions in the Q&A box. And then they'll be read at the end of Rob's presentation. So Rob, without further ado, it's your show.
Thank you, Carlos. Good afternoon, ladies and gentlemen. We're at a point in the market where the outlook for the prices of what we mine appears to be heading significantly higher. And I'd like to first show you that before delving into the problem. So I think there's large opportunity if you go back to 1970 and come forward. So 55 years of plotting the S&P commodity index against the S&P 500 index. You can see the cyclical nature, but we are at a 55-year low right now for commodities. And I don't believe it's going to stay there that much longer. The next slide is just showing the mining sector relative to the global equities. And here we're looking at global equities amounting to $126.7 trillion and mining 2.7 trillion. You can see that from this graph that in the period, the 20-year period from 1950 to 1970, mining stocks were 9 to 11% of the total global equity markets. And again, if you go back to the beginning of the 1900s, another period of 9 to 10%. We were recently as low as 1%. Today, it looks like we're around 2%. But there's a great deal of room and money to come back into our sector as we bottom in this cycle and head higher. On the just looking at copper, which I'll be speaking about later, but it's showing a nice steady upward move. We got up to 540 the other day, just from 2010. Another chart I really like is represents 129 years of history. And it's plotting the Dow against the price of gold, how many ounces of gold buys the Dow. And you can see over this period, there have been 3 occasions where 1 or 2 ounces bought the Dow, the last being in 1980, when the Dow was 850 and gold reached $850 an ounce. If we were suddenly to get down to 2 ounces bought the Dow, you'd have a $20,000 gold price. So most of my career has been spent in gold, so I'm going to speak about gold here, but I'll tell you more about a copper project we have. So on this chart, it's just showing the outperformance of gold relative to the Dow since 2006, just looking over at the right-hand column of the screen. And then the next slide is showing a breakdown of equities, looking at the seniors as measured by the GDX and the GDXJ. And this is running out to December 12 from January 1, 2010. The gold stocks are definitely lagging behind the metal price. And in the bull runs that I've seen in the gold market, we have seen times where near the end, the juniors are outpacing the seniors and the price of gold by a significant margin. So I'm very optimistic about the prices going forward. But let's talk about the problem. My title, Houston, we have a problem. This phrase wasn't spoken because the astronauts were bored. It was spoken because the systems that had always worked suddenly didn't work. And the difference between a close call and a catastrophe came down to whether mission control could see the data clearly and act fast enough. Today, our problem is not because mining is running out of rocks. It's because we're running out of people. And that's known to many of you. But the mining industry in Canada and the United States has its own mission control movement, and the alarms are flashing in 2 places. 1, our workforce is aging. And 2, the pipeline of new talent, geology, mining engineering, and mining-related programs is shrinking fast. And if we don't respond with clarity and urgency, we won't just have a labor problem. We'll have a production problem. We'll have a cost problem, and ultimately a national competitiveness problem. Right when both Canada and the United States are trying to secure essential minerals, strengthen supply chain, and build an infrastructure of energy transition. So the workforce reality, there's an experience cliff. Let's start in Canada. The Mining Industry Human Resources Council, which I'll just refer to in the future as MIHR, their 2024 Canadian Mining Workplace Profile shows a clear shift from 2011 to 2023. The share of workers under the age of 25 in Canada's mining, quarrying, and oil and gas extraction sector fell from 12% to 5%, while the share of those 55 years and older rose from 13 to 18%. That is a definition of an experience cliff. Fewer young entrants and more retirements approaching and a widening gap in between. Now let's look at the states. The U.S. Bureau of Labor Statistics shows that in 2024, mining, quarrying, and oil and gas extraction employed 575,000 people with a median age of 43. That doesn't sound too bad. However, the number aged 55 to 64 was 89,000, and those over 65 added another 30,000. So you have 119,000 workers 55 years and older, or roughly 1 in 5. So both countries, the trend line points the same way. Older workforce, thinner bench behind them. The education pipeline, fewer students entering the field. So let's talk about what should be feeding the next generation, post-secondary program.
If I can interject, I think we're not seeing your slides.
You're not? Well, there's nothing here for a slide.
Okay. All right.
Okay.
Very well. Thank you.
You're welcome. So a long-running national survey of the Canadian Earth Science Department reports that since 2015, overall enrollment is down 25%, and enrollment in geofields, geology, geophysics, geological engineering is down 41%. And also, Masters of Science enrollment has fallen 22% from their peak in 2016. This is not a minor fluctuation. This is a structural decline. And it's not just geology. MIHR has pointed specifically at mining-centric programs, noting mining engineering enrollment decreased over 50% from 2014 to 2022. In the United States, engineering and geoscience both contracting. On the US side, the Society for Mining, Metallurgy, and Exploration, the SME, has stated that mining engineering enrollment declined 45% from 2015 to down to 851 students, from 1,561 to 851 in 2019. And a 2025 National Academies publication notes that the U.S. engineering programs collectively in mining enrolled 590, only 590 undergraduate students in the spring of 23, down from 1,449 in 2015, a 60% drop. Geoscience more broadly is also sliding. A December 2025 release citing American Geoscience Institute data says the U.S. geoscience enrollment has fallen roughly 30% since its peak in 2015. Put those together and you can see the same pattern as the workforce. The replacement rate is failing. And why is this happening? The likely drivers, and there's no single factor that explains it. It's a system problem, and several forces are reinforcing each other. One, reputation and social license affects career choices. Let's be blunt. The mining has an image problem with many young people. Reuters in November of 2024 describes the industry as being viewed as dirty, dangerous, and environmentally harmful, and connects that perception to the difficulties in attracting talent. At a time when the sector faces large vacancies and growing demand for minerals. So suppose you're a 17-year-old looking to choose a career. You're not only choosing a job, you're choosing an identity. Many students want careers that feel aligned with climate goals, community impact, and ethics. If the industry story is dominated by old headlines, spills, conflicts, legacy impacts, then the mining becomes the last choice. Even if modern operations are dramatically safer and more responsible than decades ago. Second is boom-bust memory and perceived job insecurity. Students and parents remember commodity cycles. When the layoffs follow downturns, it imprints. Is it stable? Even if long-term demand is strong, the perceived risks can steer students towards fields that feel more predictable. 3, competition from adjacent majors that market better. Environmental science has become a magnet program for many institutions. The Canadian Earth Sciences Enrollment Report explicitly notes growing emphasis on environmental science relative to geofields. Meanwhile, computer science, data science, clean tech programs market a clearer, more modern narrative, often with more visible campus recruiting. And 4, awareness problem. Mining is out of sight for the urban students. There's a lack of youth awareness and interest in mining as part of the bottleneck affecting mining-centric post-secondary programs. If students don't meet geologists, don't visit sites, don't see modern remote operation centers, don't understand essential minerals, then mining doesn't enter their decision set. 5, fewer programs, fewer faculty, less capacity. When enrollment falls, universities cut. When universities cut, the pipeline shrinks further. The SME and other industry bodies have documented long-term contractions in U.S. mining education capacity, program count, and enrollment, which reinforces the downward spiral. So why it matters, the consequences if we do nothing. If this continues, the impact won't be theoretical. Higher operating costs, fewer experienced supervisors, fewer mentors, thinner technical depth, longer project timelines, permitting, geology, hydrology, tailings design, ventilation, ground control. These aren't learn it in a weekend skills. Higher costs and lower productivity. Scarcity raises wages, which will be good for workers, but a challenge for projects. And mistakes multiply when experience leaves faster than it's replaced. And there's the national strategic exposure. Both Canada and the United States want secure domestic supply of essential minerals. Yet the human capital to deliver it is weakening. So Houston, we have a problem. But that phrase contains hope because it also implies something else. We're communicating, we see the issue, we can respond. That's how Nassau did it. The industry's challenge is now to do what Nassau did. Tell the truth with data. The workforce is aging, enrollment is down. Diagnose the system, reputation, awareness, cycles, competition, capacity, and act like the future depends on it, because it does. Mining can be one of the most meaningful careers for the next generation, powering electrification, rebuilding infrastructure, strengthening national resilience. But first, we have to learn the right to be the obvious choice. Why students leave, the likely drivers, and the reputation factor? Some of the drivers are structural and well-known. Commodity cycles, when exploration budgets collapse, students and parents conclude this is unstable, and they choose a different major. Competition from adjacent programs, environmental science, climate, data science, robotics, often market a clearer identity on campus. Visibility Many urban students simply don't meet geoscientists or mine engineers, so the field never makes the shortlist. But one driver has become more powerful with each decade. The industry's reputation affects career identity. Students don't pick a job, they pick a story they want to tell about themselves. If mining is perceived as dirty, destructive, or behind the times, then even excellent technical careers get filtered out, especially by high-performing students who have options. Which is why it's not enough to say, we need you. We have to show this work can be done responsibly and we can prove it. And that brings me to Sudbury. Sudbury, from moonscape to living landscape, and the Apollo cruise saw both the myth and the reality. In 1971-72, NASA sent Apollo crews 16 and 17 to Sudbury for geology training because the Sudbury Basin, as many of you know, is an impact structure with breccia and shock features that help astronauts learn what to look for on the moon. The Canadian Space Agency summarizes this directly. Apollo 16 and 17 crew members came to Sudbury to study impact-related features like breccia and shatter cones. NASA's own history feature of Apollo 17's preparations include photos and captions of the astronauts training in Sudbury, and you're seeing it on the screen here. And Ontario TVO told the story in a piece literally framed by the idea Sudbury as a stand-in for the moon, describing the Apollo field trip in the early 70s. The contrast, what they saw then. At the time, Sudbury's damaged areas looked so barren that the moonscape nickname stuck widely. An urban myth that astronauts were there because it looked like the moon, even though the real reason was geology. So here you're seeing some of the pictures. This is the Coniston Hydro Road view back in 1970, and here in the upper left and in the lower right, you're seeing what it looked like in 2008. And I've circled the head frame in both of those. So you can see there's been a huge change. And I would suggest if the astronauts went back there today to look to the locations they were studying, they get lost in the forest. Sudbury is one of the strongest North American examples of environmental remediation at landscape scale. Because the community, researchers, government, and industry attacked the root causes and then rebuilt the ecosystem. The city of Greater Sudbury's re-greening programs states that since 1978, over 3,500 hectares have been limed and grassed, and over 10 million trees have been planted. And there's a striking then and now photos from the Greater Sudbury showing the stark barren rock in the early 80s contrasted with the substantial regrowth decades later. So, if a student's mental image of mining is frozen in black rock and dead lakes, Sudbury offers a reality check. Yes, the damage was real, and yes, restoration can be real too, measured in hectares, trees, and decades of sustainable work. Bringing it home, the reputational lever is not just PR, it's proof. And here's the point. If we want to reverse declining enrollment, we can't just talk about wages and job postings or critical mineral strategy. We have to give students a credible path to purpose, a credible commitment to environmental performance, and visual proof like Sudbury that the industry can repair, restore, and improve. Because the next generation isn't asking, can I get hired? They're asking, can I be proud of doing this work? And unless we answer that question with evidence on the ground, in communities, and in outcomes, Houston, we will keep having a problem. And that problem is not just labor, it's advocacy. It's looking at this. We have many stories to tell, and it's not an accident. It's a failure of advocacy, and more importantly, a failure of shared responsibility. As an industry, we must recruit supporters, not just employees. If mining wants to rebuild its talent pipeline, we can't do it alone. We don't just need to recruit geologists, mining engineers, and metallurgists. We need to recruit supporters, people and institutions that actively champion what mining enables and what modern mining has become. Because mining is not a fringe activity. It is a foundation of modern civilization. Every hospital, data center, wind turbine, electric vehicle, smartphones, satellite, transmission lines exist because someone found, mined, processed, and delivered raw materials, often under extraordinary technical and environmental constraints. And yet, too often, mining is expected to defend itself alone. That has to change. A simple truth. If you profit from mining, you have a duty to speak up. Here is a reality the mining industry needs to say aloud. If you earn revenue from mining, you have a responsibility to defend mining. That includes accounting firms that audit mining, for investment dealers and banks that finance projects, law firms that structure transaction and permits, equipment manufacturers that sell trucks, drills, software, and automation, consultants and engineering firms that design operations, governments at all levels that collect taxes, royalties, and fees. Every one of these groups benefits from mining activities. Every one of them builds careers, balance sheets, and public revenues on the back of our industry. And yet, when mining is criticized, questioned, or mischaracterized, many of these voices are silent. Silence is not neutrality. Silence is abdication. Why this matters to students and the next generation? Students are watching. When a young person considers a career, they don't just look at a company, they look at societal signals. They ask, who defends the industry? Who is proud of the industry? Who is willing to stand up and say this work matters? If the only voices speaking about mining are mining companies themselves, students may conclude, fairly or not, that the industry is defensive, isolated, or embarrassed by its own role. But imagine a different signal. Accountants explaining how mining revenues fund schools and hospitals, investment professionals talking about long-term value creation, not just short-term cycles, lawyers explaining how modern permitting protects communities and ecosystems, equipment manufacturers showcasing emission reductions, automation, and safety improvements. Governments openly acknowledging that climate goals, electrification, and national security all depend on mining. That chorus changes the narrative, and narratives shape career choices. Reclamation is proof, not public relations. This is where reclamation matters so deeply. Sudbury is not a press release. It's evidence. It shows that environmental damage can be acknowledged, science can be applied at scale, and landscapes can be restored over decades. Communities can demand and achieve better outcomes. These stories should be taught in school, shown in documentaries, referenced by regulators, and highlighted by financial institutions, not as excuses, but as proof of progress, a clear ask, coordinated, unapologetic advocacy. So here is the call to action. The mining industry must demand advocacy from its entire ecosystem, Not slogans, not greenwashing, not denial of past mistakes, but clear, factual, confident statements that say mining is essential to the modern life. Mining careers are meaningful, technical, impactful. Environmental performance has improved and continues to improve. Reclamation work, when it is funded, enforced, and respected. Societies cannot have clean energy, advanced healthcare, or digital infrastructure without minerals. This message must come from many voices, not just one. So, fixing the problem. Houston, we have a problem. And now we can name it precisely. And it's not that mining lacks purpose. It's that too few people are willing to publicly defend that purpose. If we want students to choose mining, if we want communities to trust mining, if we want governments to enable mining, then everyone who benefits from mining must start talking about it clearly, honestly, proudly. Because modern civilization doesn't run on good intentions. It runs on minerals. And it's time we all said so. So now I want to show you what we're planning to build in Argentina at our massive copper project, Los Azules, which is designed to change the public's negative perception of mining and to attract talent. But before that, just a word on McEwen Inc., the parent of McEwen Mining. You can see where our assets are distributed through North and South America on this chart. And we're going to talk about Los Azules, which is down on the border with Chile and Argentina. So we'll go to that. We have a...
Let's do that. Yeah, let's do the Los Azules project. But in the meantime, you bring in a lot of ideas and a lot of goodwill to Argentina. And why Argentina? And how are your meetings with the leadership as well as the province in terms of your expectations, in terms of expectations being the positive conclusions?
Well, okay, Terry, I'm going to show you Argentina, and then I'll answer that question and other questions that might come forward. So this is a 5-minute video on
planning the world's first regenerative copper mine in Argentina. It goes without saying that we need to transform industry to provide us with the materials we need for a renewable society, but without the historic legacy of environmental damage. Copper is one resource that will only grow in importance as we replace fossil fuels with a decarbonized world. Electric cars, wind turbines, batteries, solar panels, and the computers that power everything all require copper. And that copper needs to be green copper, carbon neutral, and ecologically responsible. When we started the project, we began by drafting a set of principles for the project that would guide the team in its decision-making and approach. We did this work informed by the place itself. The Andes are an incredibly beautiful and sensitive ecosystem, so we knew it was our duty to be stewards of this place, protecting habitat, glaciers, water, and life itself, while at the same time getting the copper resources that we need. So we've been thinking carefully about the future first and our eventual legacy. We then focused on the people, the miners, and the community itself. And we've been working to create a new kind of experience for people that live in San Juan and the surroundings. Over the life of the mine, over 1,000 high-quality local jobs will be created. And these will be jobs unlike any others in the industry. We think people will covet working for McEwen Copper because not only do we focus on safety, but also on dignity and livability, creating a mining facility that is an oasis in the sky. Here is our vision for the mine camp of the future. Beautiful, inspiring, and bold. A biosphere of health and life. After a long day of work, our people will return to a place completely powered by the sun and creating ideal conditions for rest, sleep, recuperation, and the daily needs of miners. Imagine a place that grows its own food, collects and treats its own water, and generates energy without emissions on a giant solar super roof. We are placing specific emphasis on indoor air quality, acoustics, and stress reduction with a focus on social justice, equity, and even beauty within a mine setting. This will be a place to live and thrive while earning a living. We're designing an ecological water treatment valley that not only completely protects downstream water quality, but allows for the creation of new habitat and the enhancement of vegas. Partnerships with local universities and scientists will see new advances in natural phytoremediation, water treatment, and ecological testing to ensure that water is always pure and healthy. Our entire mine operation will be powered by on-site and off-site solar farms, generating all electricity without carbon emissions. Wherever possible, conveyors and fleet facilities will be electrified and plugged into this network of clean energy with batteries instead of diesel for backup generation. At Los Azules, we are not building a mill. Instead, we are advancing heat bleaching techniques to extract metals chemically and in a completely closed loop process with radical reductions in energy and water requirements as a result. And finally, a state-of-the-art, renewably powered electrowinning facility will produce pure copper, so that from the pit to the product, our investors and customers know that sustainability informed every single step, and they can count on that for their own ESG goal setting. Our planning process continues, and we look forward to sharing more innovations as we develop this amazing project further. At McEwen Copper, we are striving to deliver the world's greenest supply of copper in the world's first regenerative copper mine.
So that's what we're hoping will change the public's perception. I'll just show you McEwen's. We're listed on New York and Toronto. We closed our first financing back in September of 22. What we're planning to do in the Andes attracted Stellantis, the sixth largest car manufacturer. They're our second largest shareholder today, owning about 18% of the company. That was followed by Rio Tinto. They came in right at the beginning as well, the second largest mining company, and they looked at what we're doing there. And I think that helped propel our stock price up during a time when the gold market was just starting to take off. But up in the last 39 months, up over 500%. And just to leave you with one thought of this is a price sensitivity of Los Azules. We put out our feasibility study about a month ago. It was Argentina. There's a RIGI program that added significantly to our net present value, but we used a price of $4.35 a pound. Today, the price is about 25% higher, and the impact on our NPV is an 86% increase in value. So I think you can go out, and I would hope one day that what we're doing at Los Azules might be considered a model for other mines going forward. And just to add a little bit of humor, there's a not too long ago, my wife for my birthday had some beer made, and she put a picture of me sitting on a bunch of gold bars when I was running Gold Corp, and it was called Rob's Gold Brick Beer. And today, a friend, sent this in, and I hope it's amusing. So, thank you, CIM, for allowing to make that presentation.
Well, thank you very
Rob,
much,
I know
Rob.
that's you got a meeting in about 15 minutes, but let's look at some of the questions here. Just overall, it's a very busy province where you are with Rio as well. In terms of
Hey, Terry, we're not able to hear
exposing
you.
the
We're losing you, Terry, on
If you
when
want,
you're
I can read the
speaking.
questions. So let me read the
I got a
first
specific
question from
question
Bruce.
about Argentina skill, Argentina's skill set as well as the expertise, competition with the other big companies that you have in Argentina. Schooling in Argentina is still not the par of the Chile next door. And Chile next door just had the election on the weekend. They're back on the right track again in terms of the future projects as the new government will come into existence. How do you? I mean, there's a leadership which actually supports the mining that you met, the leaders, and are they thinking like the deep thinkers, going into the education system and skill sets and everything else?
They're going to have to step up their education. We have a community center in the closest community. When we were there just working to get the feasibility done, we ran into a shortage of drills available. We ended up buying 8 drills, and last year we had 22 drills on the property, but we set up training programs to train drillers, helpers, and drillers. I know one of the other projects in the San Juan province where we're located, they were looking to bring in talent from Chile. There was some local opposition to that, but yeah, there's a lot of skills. San Juan province has a good history of mining. Valadero's there and Pascalamo is there. There's others. So it's not devoid of talent, but there will be a crunch when Vicuña starts coming on and El Pachon comes on and Altar comes on. We benefit from probably being the first through the gate into construction. We were approved by the REGI program, which is a large financial incentive program. And we're the first of the copper projects to be approved by REGI. Our capital intensity will be smaller than what Glencore would be or what Vicuña will be. We're closer to infrastructure. We're at a lower altitude, which all impact on comfort of the workforce there. But I think we'll be through the gate first on our current trajectory. That's not to say people won't get hired away, and there will be a greater need for training. So I've been looking at some of the schools out there that use AI to help accelerate education. I'd like to see that also in Canada as well as Argentina. But Argentina, I've had the pleasure of meeting with the president twice. He's a libertarian by political persuasion, economist by education, worked with one of the billionaires in Argentina, very much committed to attracting foreign capital to the country, to wrestling their inflation down to the ground, and seeing large capital projects generating long-term sources of taxes and employment for the Argentinian country. I can see 10 years out, if all the projects in San Juan province come on stream, it could bypass Peru in terms of annual copper production. So in the next 10 years.
Fair enough. Thank you.
Yeah. Okay. So there's a number of questions. I know you're running to another meeting. How long do you have, Rob?
15 minutes.
Okay, so you know what, I'm just going to read the first question, and I do apologize for those who submitted questions. What have you done today that did not involve a mineral? This is the universal theme to present to students and the public. Have you sent your geologists into the classroom with this message?
No, have not. There is some, but you have, I think every company does it. They have their family days at site. Well, there is this, I'm trying to think of her name right now. She does a wonderful thing. It's for girls, look considering mining and dresses up. Makes a very nice book. We've distributed it to schools in Timmins and in Eureka, Nevada, and got a very good response from the classrooms. So that was just trying to familiarize themselves with mining.
Okay,
But
and I think there's one
Actually,
last
Carlos,
question.
just a second, just a
Yeah.
second. I think that's a very important point you raised. Rob, like in our days at mining engineering, I would say
We can't hear you.
profs were 80% of the profs at McGill were actually from the industry. They were not PhDs, okay?
yeah, the lady's
One of
name is
the
Lena Rhodes,
Lena Rose.
and she has a book that for schools. I ordered a quantity to distribute them. She does a really good job. She dresses it all with um, fake gems and makes it glamorous. And we have to make mining sexy and compelling, interesting. And I think if I was just coming out of school and I walked into, well, I like buying distress. So the assets are old often and they have to be rebuilt. But it's sort of a frightening environment. If you walked in and you found most of the people working are twice your age, if not more, they're out of shape, and the place is dusty and dirty, and it doesn't resemble a classroom. You go, I don't think I'll look around. Thanks. And I contrast it when I've been to SpaceX, their factories, acrylic floors, stainless steel, people moving around, big projects, great excitement. And that's what we want to do in mining, is to change that narrative.
There's one last question, if you don't mind, just because I think it's a relevant question. How do you see cross-border and international development for educating happening? I'll read it again. How do you see cross-border and international development for educating happening?
I haven't thought about that at all. Sorry. It hasn't been a topic that come through like cross-border. I think wherever you're operating, it behooves you to go out and try to bring people's skill sets up as much as you can. I don't think it is cross-border. I think it is where you're
Yeah.
operating.
Yeah. Okay. And just a comment from Bill Roscoe. I think you know Bill.
Yes.
Great presentation. I think industry leaders and the other stakeholders need to develop a common set of facts with examples to get out and advocate to the public, schools, governments, etc., via speeches, conversations, especially social media.
Well, I think also the advocacy. I really think everybody in the industry should be pushing back against their accountants, their investment dealers, their lawyers, and the government and saying, hey, what are you doing to support this industry? It's a bedrock of our country's economy. And as I said in the speech, we can't do it alone.
Yeah.
We need more of them. And I've been pushing our auditors and our lawyers, investment bankers to say, come on, guys, show up. Start doing something.
Mhm. Okay. Thank you, Rob. Before I give it back to Terry to say some final notes, this, like I said, this is being recorded, so this is going to be shared with all who registered. So expect an email from us shortly, I would say within a week or so. Yeah, and do join us in New Year because we've got our first speaker in the New Year is going to be the Bank of Canada. So we've got literally a tag team speakers from the Bank of Canada. So it should be a very interesting dialogue and more details to come very soon. So Terry, feel free to take over.
Thank you, Carlos. Thank you, Rob. Once again, it's a pleasure to have you with us. And in the meantime, Merry Christmas and Happy New Year for everybody.
Okay.
Thanks for attending.
Merry Christmas, Happy New Year.
Take care.